Hey guys, today I'm going to be showing you 5 simple tips so you can start saving money and go on your journey to financial independence starting today. Now, saving money is always one of those things that's easier said than done. It's so easy to say, "Oh, I'm going to put this much money away every month and I'm not going to touch it. I'm going to let it, I'm going to invest it. I'm going to do this, I'm going to do that with it." It's so easy to say that, but when it comes down to actually doing it, that's when things get tough. And I'm hoping these simple tips can help get you on the right track to actually completing these tasks that allow you to save money and grow financially. Now, the first tip that I'm going to cover is opening a savings account. Now, that's a pretty obvious thing that you're going to have to do if you want to save money, but there's more to it than just opening the savings account. There's a few things that you're going to want to do to make sure that you're getting the best deal when opening your savings account. So the first thing I want to stress on is make sure that you're getting an okay interest rate on it. Right now, there's so many banks offering horrible interest rates, whether it be 0.1%, 0.5%. Those are both bad interest rates, and that's what many banks will offer. I believe the bank that I use my checkings with, if I were to use their savings program, they only offer 0.05%. And to put that in perspective, that's 5 cents a year for every $100 in my savings. Now that's just horrible. When opening up your savings account, I would recommend that you use a different savings bank and use a different checkings bank, like 2 different banks for checking, one for checking and one for savings. And the reason you're going to want to do that is so you can't just easily transfer money over from your savings account to your checkings account. If you're easily able to transfer money over from one to the other, you're going to be tempted. You're going to be like, "Oh, I'm running low on money in my checkings. Let me just transfer some from my savings so I can buy blah, blah, blah," whatever it is. Probably something unnecessary that you don't need to take from your savings to buy. And my recommendation for going and looking for a bank that you can start a savings account with is one that offers a high interest rate, like I was just saying. You want it to be like 2% or higher. Ally Bank is a really good bank for this. I'm not really sure what other banks offer 2% or higher. A quick Google search saying high interest savings bank accounts, that'll bring you up the best bank accounts that you can start a savings with. And some can even offer a bonus, but don't be lured into these, as sometimes these same bank accounts that offer some sort of opening bonus also have like a monthly fee. You want to avoid that at all costs. So once you have your savings account open separate from your checkings account, your first task, the first thing you want to do is fund that savings account with 3 months of your expenses. And what's 3 months of your expenses? Well, I'm talking 3 months of things that you absolutely have to pay every month or you're in trouble. Things like your mortgage or your rent, things like your utility bills, car insurance, car payment, and the minimum amount of groceries that you're going to need to survive off every month. Just minimal things like that. Nothing fancy, nothing extra, no entertainment. You don't need to put your expense that you go for your monthly bowling tournaments or something. I don't know. That's just an example. You don't need to put that in your 3 months of savings, because if it comes down to the point where you need to use your 3 months of savings, you should be cutting out any unnecessary expenses. So you want to fund that savings account with 3 months as soon as possible. That should be your first priority. So say your goal should be to be saving at least 30% of your paycheck. So just keep putting that towards your savings account and you'll be there in no time. So once you have your savings account up with 3 months of your mandatory expenses, you might be thinking, "Well, now what am I doing with 30% of my paycheck every month?" Well, that's when you start getting into investing or starting your own business, anything like that. I personally recommend going with a Roth IRA to start. A Roth IRA is eligible for anyone who married jointly makes under $270,000 a year, or if you're single, it's like $135,000 a year. So that's most people. And if your income is lower than that, you're eligible to open a Roth IRA. Now, what is a Roth IRA? A Roth IRA is where you're able, if you're single, $6,000 a year, you can contribute to it every year tax-free. You can't withdraw it until you're at the age of retirement, which is 59 and a half. You can retire earlier, but you won't be able to touch it until you're 59 and a half. And once you start withdrawing money from it, it's all tax-free. You don't have to pay a dime on the income that you've made, not the income, the profit that you've made from the stock market that you've invested in. Now you might be asking, how do I open a Roth IRA? Where do I go? Who should I use? There's so many brokerages. So I personally use Fidelity because I like how they run their index funds, and you can make trades on Fidelity ran index funds with no fees if you're with them. But that's my opinion. You don't have to follow like what brokerage I use. You can use Acorns, you can use Robinhood, Webull, E-Trade. I use Fidelity. That's just who I use. So just look up what brokerage is best for you and for what you want to do. So you've opened up your Roth IRA or any other brokerage investment accounts, maybe a 401k with your employer, any of that. You've got that all situated, and you're putting money into it monthly. So the third tip that I'm going to cover is one of those ones that truly is easier said than done, but hopefully with my guidance you can actually get to doing it, because this is what separates people who say they want to save money and people who actually save money and can achieve financial independence. And that's creating a budget. Creating a budget, sometimes it's a little tough. Once you get down to it and really like start working on your budget, it's not as hard as you think. So my recommendations, as I've said earlier, you want to save 30% of your money, minimum, 30%. Sometimes it's going to be hard. Maybe you have payments that you're just not going to be able to make if you're saving 30% of your money, but that's a sign. If saving 30% of your money isn't like doable, if you're not able to save 30% of your money, that means you're living above your means. You can't afford your lifestyle if you can't save 30% of your paycheck. So figure out what it is that maybe you're not able to save 30% of money. Maybe your car payment's too high. Do you need to refinance, or do you need to sell your car, get something cheaper? Maybe it's your car insurance. Maybe you need to shop around, find something else. Maybe you simply spend too much money on fast food every month. It's things like that you need to account for and figure out, how much can I spend on each thing every month to live within my means. So living within your means, from my perspective, from my opinion, is being able to live off 70% of your income while you're able to put away 30%. Now, when making your budget, I truly recommend budgeting to live below your means. So we talked about what's living within your means. I say spending or living off 70% of your income. So living below your means would be living off, say 50% of your income. Now, if you're working minimum wage, if you're not making any sort of good income, it might be really hard to live below your means. Living below your means, you shouldn't be just eating rice and beans every night because you want to save money. You still gotta eat okay and be healthy. You can't sacrifice major things like that just to live below your means. But if it means moving into like a smaller apartment, or maybe if you own your home, renting out one of the rooms, it may lower your quality of life, but it'll help bring in extra income so you can live below your means and save extra money. So now you may be asking, so I'm living off 50% of my income at this point. What do I do with the gap? I'm saving 30%, I'm living off 50%. What am I doing with this 20%? So that's going to bring me to my next topic. You want to find ways to increase your income. Well, what does this extra 20% I have do with increasing my income? Well, that extra 20%, that's when you can start looking at maybe opening your own business, whether it's just a small little side hustle like flipping phones or something small, just buying and reselling stuff from Craigslist. Or it can be something bigger, like say you're interested in photography. You can start using that 20% to save up towards a camera and start your own photography business, something along those lines. But increasing your income is a very important step to becoming financially independent. Say you're able to make $500 a month doing some sort of side hustle, something that you enjoy, something that you truly enjoy, and it makes you a little money. And it's important to separate your hobbies from side hustles. Hobbies don't make you money. Side hustles can make you money. So yeah, that's where budgeting ties in with increasing your income, and you're able to take that extra 20% that you have from living below your means, and you can either invest it or you can start your own business to bring in extra income. Now the last tip that I'm going to bring up to you guys is building your credit. Now you may be asking, how is building my credit or even opening credit cards going to help me save money? And it's actually much simpler than you might think. Now I know a lot of financial gurus or experts a lot of times recommend never using credit, and I agree with them for the most part. You shouldn't use credit unless you really need to, or unless you're using it to build your credit, to build your credit score. So I recommend getting, like, say you have no credit or you have bad credit, just getting any credit card that you're eligible for and buying small things with it. Say maybe put up $20, $30 a month in charges, whether it's from gas, groceries. Don't buy anything you wouldn't normally buy with it. Just put a couple charges on it every month and make sure you pay it off in full. By doing this, you're gonna raise your credit score. It's gonna take a while. It's not a quick process, but you're gonna be able to raise your credit score. And say one day you're planning on buying a house, like maybe you currently rent or you live with your parents right now, and you're planning on buying a house one day. To buy a house and get approved for a decent loan, things you're going to need to do is save up maybe a 20% down payment of the house, which ties back in with living below your means, so that way you can save up to make a down payment on a house, for example. And on top of that, you're going to want a good credit score so you can get approved for a good loan. So say you're paying 4% interest on a mortgage, that's really high and something you would definitely want to avoid. But if you get a good or even just a decent credit score, you can get an alright interest rate on a house. Like me, for example, I pay 2.5% interest on my house, and that's because I started building my credit from the day I turned 18. I opened a credit card, so I was able to start building my credit. Building your credit will save you a lot of money over the course of, say, 30 years on a home mortgage. Thanks for staying to the end of the video. I really do appreciate it. If you had any advice for others, maybe something I didn't cover, or maybe even just you want to add on to one of the things I did talk about, go ahead and comment below. Any questions, I'll be sure to reply to you. And if you did like the video, make sure to hit the like button, subscribe. Thanks for watching, and I'll see you later.